When the market gets all wacky and crazy and goofy, there's only one thing to do, and that's to call in Roman Bogomazov. And we're going to have Roman talk to us today about the markets. Roman, thank you for being here.
Well, thank you for this humorous introduction, Bruce.
Well,
but
I was deadly serious.
I would say this: when in doubt, go and check out WMD that Bruce and I conduct every Wednesday, and this is where things happen, because yesterday's session was just phenomenal, and we have a lot of feedback from our students. So I was extremely pleased with that, and we're gonna give you some highlights today as to what we've talked about yesterday.
Roman likes to do these market rants. And so Ramon did an epic market rant yesterday. So that was really interesting and fun, informative, fantastic. So let's see if we can't get sort of a taste of that today. So with that, something that we're all aware of now, which is this incredible short squeeze that's been going on. And I think this chart does an interesting job. In the last few days of trading, you can see the most shorted stock basket, which is the top chart. And this is from, I believe, Goldman Sachs data. And the bottom chart is the Goldman Hedge Fund VIP basket, which is the most bought and loved stocks in the Goldman hedge fund universe. So looking at that, Roman, what the heck is going on?
Well, I think, Bruce, you have a much better explanation as to what is going on. But the first thought that, where we could start this discussion is that, well, what are the hedge funds doing? They're definitely constructing their portfolios in such way where they have to have long exposure, which is going to be overweighing the short exposure. So this means that they're going to have short positions in their portfolio as a function of the diversification. And they are going to look at the stocks that have been in the prolonged downtrends, because usually trends sustain themselves. And this is where, they're kind of losing the a little bit of the perspective when the stocks go from the downtrend into a trading range, into some consolidations that become accumulation in nature, and then they are being caught up in the extreme move up, which is obviously has been driven by the social media crowd. And they are experiencing the same type of pain as the regular retail traders would have, been on the wrong side of the trade. And I think, if you could kind of explain to us what is going on with these two charts. Is that what these two charts are showing?
Yeah, I think what's happening is, well, we could go back and look at, say, GameStop, which is the really the poster child for all of what's going on, but it's certainly affecting a number of stocks. But in the case of um, GameStop, the the stock stopped going down in 2019 and started to build a big, beautiful Wyckoff accumulation base, which was really endemic of a stock under accumulation, as a number of these other stocks were. And so you have these hedge funds that have these fundamental ideas about what's going on, these fundamental theories. And so here's a stock that's been going down for multiple years in a ever increasing downtrend. And the thing that a short seller has to do to maintain a rate of return in a stock that's dropping, because stocks can only drop to zero, is that they have to take ever larger positions, larger share positions in ever falling stock prices to be able to maintain their rate of return in the decline. So effectively at the bottom, if they pursue this strategy, they have the most number of shares short at the bottom because they're shorting all the way down. And so, and the goal for many short sellers is to have the stock go to zero. And so that's the goal. But as we can see here, that isn't the case in many incidences. And here we can see stocks that not only did not go to zero, but have been in a moonshot. So that would be my short sort of description of what I think is going on with many of these hedging, short selling hedge funds.
Well, let's look at the charts of those stocks.
Okay, so we're going to stop here for a sec and we'll be right back. Okay, Roman, we're looking at 4 charts here. So
Yes. So
show us what's going on.
so the first one is GameStop. So the most popular short squeeze that we have had in the latest 2 weeks or so. And this just has been an amazing run, in those stocks. And obviously, if you're on the correct side of this stock, then, you would be heavily rewarded if you could continue holding this position. Now, we were going in yesterday's class through some of the points, and I think that the main point here is that hedge fund managers that shorted the stock were incorrect in their analysis. And I think they just don't use the technical analysis. They're using the fundamental analysis and fundamental ideas that a stock like this should go to zero just because the business is suffering. But us technical traders and technical analysts, we're looking at the specific price structure. So we're looking at the accumulation here, and we're seeing how there are multiple attempts to go down after the first initial stop in action, after the change of behavior on the automatic reaction. And then look into this area right here. What a beautiful example of the effort versus result. The price is being pushed down and yet recovers really quickly back to the resistance. This is a sign of strength in itself. And then that is being followed by a very, very low volume signature and another higher low, inability to sell and push the price down type of reaction. And that is confirming the whole accumulation pattern, and this acts as a last point of support. Now, even if we missed that, the key is going to be in this rally right here. Even after this rally, after we are coming out of the formation in a sign of strength type of rally, we're noticing a lot of urgency by other institutions. There are other institutions that are on the opposite side of the trade, which is profitable side of the trade. They are pushing the price up, and that push and character of this push suggests not only continuation but also substantial momentum to come. Obviously, we would never guess that the momentum would be so strong. So another reaccumulation as a backing up action in the upsloping structure, and there are multiple points of entry here that you could utilize for this position, and then obviously the big rise. So the first leg up usually is going to be a suspect because you're going to have such a huge increase in the volume signature that you instantly would be thinking that supply is present here. So you have to be careful not to get out of this position right away. So how was I involved in this? I did not have any positions here, but I started shorting this stock actually yesterday at around 350. So let's just go to 5 minutes. And I'm kind of missing a little bit a trade here. So started opening positions here. I only open positions in options just because of such volatility. And it was really difficult to trade yesterday in the morning. I felt like the brokers, and I'm using thinkorswim, was like slowing down the orders. So that was very frustrating. And then today in the morning, look at another attempt to overcome the overnight high, and then what a drop from 460 to almost $100. So that was the trade.
Wow.
And
That's just crazy. It's a
that's
crazy
crazy. Yeah,
run. Yeah.
that's really crazy. And
And
that's just
so,
unwinding of this, short squeeze.
and
That's what's happening right now.
and for many of the Wyckofians, our friends in the Wyckoff Nation that's looking at this, you can see very clearly that this is an upthrust after distribution type structure which immediately goes down to the bottom, the support area, and then there's an attempt to rally, which we would call the last point of supply, completes the distribution, and then you have an outright decline out of that structure. And the to me, the big message in this is once you get a distributional structure and completion, they can declines can move so quickly. I mean, it's just stunning how fast a stock or a market can fall once it's completed distribution.
And another point, which is Bruce, just brilliant thought there. How the structure unfolded. So thank you for this. Another thought here is that think about what is happening here, right? So as a lot of social media participants are still in this position, and I believe that they're seeing this huge drop from 460 to $100. And what are they thinking? Oh my gosh, something is going wrong. But at the same time, they're thinking that there is some value for them right here. So what they do? They start buying back, and they are participating in this type of move, which it's going to be interesting to see. Could we come back fully into the trading range, or will we just have another low or high and then a drop to the downside? So that's what I would be kind of expecting at this point. AMC kind of has the same type of story. So my only message here, again, if you would look into this formation here, this is an accumulation. And as a Wyckoffean, as a technical analyst trader, that's how you behave. You behave on the premise of the idea that your knowledge shows you that there is an active accumulation, and then you get lucky. And then it's all about the execution. Can you exit at the correct moment, understanding what's going on? Well, let me show you kind of like examples of what I think are good exit strategies. So this stock right here, iRobot, was in my personal account. And you could see that there are two major structures here, one over another. And the rally in between shows that sign of strength, change of behavior type of rally that is suggestive of continuation after a possible reaccumulation. The key in this formation for me was this reaction here, where we see diminished supply characteristics and then also inability of the price to go lower and creating a higher low. So the points of entry were right here on this after these two reactions. I was not anticipating such a quick move, although the targets were above 150. And there was also a thought and kind of a mental suggestion to get out on this bar. And I'm really happy that I held on to this, just anticipating that after initial quick momentum, we might have a continuation, which has happened. So my exit was around 180. And one might ask, well, first of all, you didn't catch the top. And well, it's very hard to do that just based on the reversal characteristics. But how do you actually exit? So with this type of momentum climactic moves, you really, really have to slow down and go to the smaller time frame. So let's go even to the time frame of 1 minute. So here you could see how this momentum takes us to almost 200. And the first attempt to sell and reverse was somewhere here. Look how this bar is penetrating the extreme momentum bar and on what volume signature. So not a lot of supply, and then we're not covering the full body of this bar. So that is suggestive again of the continuation. So you continue with this trade, then you move your stop loss below the big bars right here, and then look at this red bar. So this is a change of behavior bar. And if you want to learn about those, by the way, sign up for our courses. And it covers the whole body. And look at the volume signature on this bar. It actually is so much more of what we've seen on the previous example where there was an attempt to sell. And this is where you start selling. So I just did not even hesitate in the morning. I just sold it. The premium increased dramatically from under $1,000 to all above 8,000-9,000 per option. So that was a really, really good trade. And then another trade, which was in the institutional portfolio that I manage. Again, the whole point here is that we were in the pattern of the accumulation. We had a sign of strength. We had here elements of the increased momentum characteristics and also slight increase in institutional participation. That suggested continuation. We didn't anticipate such continuation, but still suggested a continuation. So positions were opened here, here, and then here. And the more than half of the position was closed at 182 and 165. So the average was probably around 175. And you have to take profits here because the velocity with which you made money suggests that this is the time to take profits. And if you want to hold on to some of it, that's what you do. Bruce, so
And
these were the trades and kind of like the logic of um, how you have to deal with this type of quick momentum.
and you're very generous to talk to us about these trades because they are real life white coffee and events that you have acted in. Now, we're not making any recommendations here. These are past trades that Ramon has participated in, and they're showing an immense skill level. But let me ask you a philosophical question,
Mhm.
and that is very clearly in these examples, and the reason that you engage them, I believe, and you can correct me, is that you were seeing classic large accumulation occurring. I
Mhm.
see, like in this structure, National Beverage, this is an accumulation that goes back more than a year. It's a
Yes,
very large structure. How is it remotely possible
I know.
that there could be people squeezed holding short this stock after such a large structure?
And the question, even like with AMC and maybe to a certain degree with GameStop, you might argue that this area right here, which was the sign of strength type of area, was not that prolonged. It happened very quickly. But in this particular stock, I mean, look, it took from March to September to produce that sign of strength. So your argument is just like brilliant because it just basically tells us that those short sellers, those hedge fund managers, they just don't know the technical part. And I think that for shorting, you have to know how the structure unfolds. Would you agree with
Well,
me?
I I would go further and I would say that they need to take your course.
Oh my gosh. I know.
Now, one thing that I've always learned about accumulation structures, this is going back for like 40 years, over 40 years of learning this material, is that one of the things that propels a stock out of accumulation and into an uptrend are the shorts that cover at the conclusion of accumulation as the uptrend is beginning. Isn't this a normal process in accumulation? Is that you have shorts that help to propel the stock up and out of its accumulation range?
Yeah, absolutely. And we kind of could see this in these rallies that start to accelerate. So, and this is what was so attractive in this particular stock, because when you start seeing acceleration of the momentum, you start thinking that, first of all, buyers are coming in and demand is increasing. And then selling has exactly, the functionality of what Bruce is discussing. They are covering selling, and by this covering, those become market buy orders, and that increases to the overall demand signature and increases also the overall volume signature, and that pushes the price up.
And also, wouldn't you say that these market buy orders, where shorts are covering and trying to get flat in this position, is that they're panicky buy orders? They're rushing. They're just going in and just buying any way they can because part of the logic of the conclusion of accumulation is the stock has been absorbed. It's very difficult to buy because large informed interests, the composite operator types, have absorbed all the shares during accumulation.
Absolutely. And I wonder, Bruce, I mean, like covering in this area is one thing. Go figure how you cover here.
Oh,
I mean, This is just like such a billion-dollar loss proposition to cover, let's say, millions of shares on the way up like this.
What is the composite operator doing it as a stock like that goes vertical? And you
Yeah,
can see
I'm
the
going to tell you
composite
exactly
operator.
what the CEO is
the
doing.
com the composite operator's footprints are all over this accumulation. So tell us.
Well, let me give you an alternative. What is composite operator doing? Let's say when the hedge funds are covering their shorts, the composite operator goes to Reddit and Twitter and tweets it was a suggestion to
Oh,
buy. That's what it is.
oh, okay. Um, well, they don't even have to advertise. The stock price going up at the rate it is all the advertisement you need. I think they were going to lunch, is what they were doing. Is
Okay.
is it?
All right.
Yes.
But the biggest question that we posed yesterday in the WMD discussion is who is the real composite operator?
Yeah,
That's the question.
that
Who
was a
drives
great,
the price?
yeah, that was a great discussion. So fill us in.
Well, that's what I'm saying. That the composite operator could change the, um, uh, it does not have to be institutions per se. I mean, like we just seen such an example of how the social media crowd could drive the prices up, and they are acting as the CEO. Obviously, a lot of them will lose money on the way down. That's
Yeah,
that's undeniable, just
yeah,
because they don't have enough skill,
yeah.
to participate in something like this. But still, just driving the prices up and driving institutions out of these positions, that's remarkable.
I do think that the social media crowd, I guess, to use a term, is sort of getting a bad rap here because I believe that the majority of the squeeze that took place was the product of these hedge funds being short something they shouldn't. And the other part is that the large accumulation and the absorption of shares took place in the base by the large composite operator interests that wanted to own this as you were buying it and owning it on the way up. Is that for them to blame the social media crowd who participated, and
Mhm.
it's wonderful that they made money, but I believe to blame them for this is wrong.
Absolutely. I totally agree with you. And if anything, I want to just say, to those hedge fund managers that whine and complain about those, billion losses and they being bailed out by their, hedge fund friends. As I'm you and I, we're both involved in the institutional world to a certain degree. So I just want to say that, if you cannot play this game, don't play it. That's it. That's just my take on this.
I've actually known a number of short sellers in my career that are professional short sellers, hedge funds, et cetera. And they, in most cases, are fundamentally oriented in terms of how they
Interesting.
select stocks for decline. And they're looking for stocks that are in deteriorating business conditions, or they have bad financials, or they have, et cetera. And for the most part, uh, they're vulnerable. They're vulnerable to the kind of exposure to risk because their fundamentals don't change when the tape does change, when a decline becomes a consolidation that turns into an accumulation that produces a big reversal upward. Their fundamentals often lag and don't become evident until much later after the uptrends occurred or some
Yeah.
part of it.
Yeah, this is such a great point, and I think this is where their disconnect is. It's just like not understanding how the downtrends unfold, how they conclude, and how accumulation, takes place. So they just correct initially in the downtrend. And what I've noticed in all of the stocks, Bruce, and you mentioned this yesterday in the WMD, is that they were in the sustainable downtrend all for a long time. I mean, look at this from 2016 or distributional top as a redistribution in 2014. So they're just keeping it as a short in their portfolio, and that's what they're doing. They don't have to even look at this on the daily basis, and then they just squeezed out.
Well, and the fundamentalists, because they're so convinced about their story, that as the decline occurs, they continue to add additional shorts on the way down. So literally at the bottom, they can be at risk of having the most shares short at the bottom of the decline. And that is a very tricky place and dangerous place to be.
All right. Well, Bruce, do we have a time left for our market discussion?
Yes, we do. So we have a few minutes. Let's pause. We'll be right back. Okay, so we're looking at a NASDAQ composite point and figure chart. And this chart is just a way for us to be able to identify whether or not there's more potential in this uptrend to continue. So you can see here that we have still about 1,000 points of the NASDAQ composite objective count available to us here. And so Ramon, any thoughts on this about the ability of the market to continue higher?
Yeah, I think that we definitely have high objectives. We have to keep that in mind for sure. We also have to think about what has happened yesterday with the market, where the market produced a change of behavior bar, suggesting that we might be in some kind of consolidation temporarily. So the market never moves in like a vertical move unless this is a Gamestop, or the short squeezed stocks like we've just discussed. Usually the market is much more balanced just because of the size of it.
So the the market's going to tend to be much more of kind of consistent in its moves up and down. And of course, this is quite an impressive uptrend, but you can see how beautifully this reaccumulation since September into late October build a beautiful cause for higher prices, and here we go. And we've talked about this in the Wyckoff market discussions over time. So with that, you have something else to show us, so let's go to that here.
All right, so let's look at the current market. As we said, we're coming out of this formation on a sign of strength, backing up action. There is some supply that is coming in, but yet that supply is being tested and absorbed in this area. So this area is extremely important to us. This is probably our target number one. Our target number two would be here to the downside. But the big question, would we even go to those targets? So let me show you just one small analog that I was discussing today with Alessio, our crypto asset expert. And we were looking at 2016. And 2016, in a way, has the same type of characteristics of the recovery off the low, where we have a very big momentum rally. We have an ABC 1, 2, 3 type of structure into the Brexit that reminds me of September, October, November price action, sign of strength. And then look at this price action, the texture of it. There is not a lot of momentum. So kind of reminds me of what has been happening in the last 2-3 months. And then look at this. We have this big move down, one bar. And then what is the next bar doing? It's covering the body of this previous bar. So let's quickly go back to where we are right now. And I mean, characteristically, we are having the same type of structure, a sign of strength, loss of the momentum, one bar that has a lot of selling, and then almost instant recovery. So what does that suggest based on the analog? That suggests that we might be in some kind of consolidation that could be, again, low momentum, very well confined, and maybe at the end we're going to have some kind of spring to this area or to this area that we've just discussed. Bruce, what do you think about this scenario?
I love it. I love your analogs, and this is an excellent one. And we're going to end on this. Ramon, what a blast. You were very helpful in explaining what's going on here, and thank you for being on Power Charting.
Thank you. Always happy to be here.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.